How's it going, everyone? Another big week in the real estate, mortgage, and finance market. What came out this week?
This week, the big news, CPI. So we have been saying forever, circle May 10th. And we even had our good friend and content creator partner, Barry Habib, who we follow very closely, had been preaching probably since January, right? Saying circle May 10th. And I've seen a lot of people report that the CPI came in under expectations, which is actually technically incorrect. What happened was there were a few revisions to some of the previous numbers, but overall, we did get a positive report. So break a little bit of that down for us.
Yeah, so month over month, it went from 5% to 4.9%. But the year over year numbers, what you really want to pay attention to, it went from 9% down to 4.9. So that's a huge loss on a year over year basis. Also, when you look at the core reading, specifically the shelter component, which is 43% of that core reading, we finally hit the bell curve and it's going down. It went from 8.2% to 8.1%, which is something we've been waiting for quite a while. And then also PPI came out as well. That came in at 2.3%. Last month, it was at 2.7%. Year over year, a year ago, it was at over 11%. So a major decrease on a year over year standpoint.
Inflation is only improving, right? So let's look ahead. So we have the CPI upcoming, right? We pay attention to June 13th and then July 12th. So I'll use Barry's prediction. He's smarter than me when it comes to this. Barry says that after the July 12th, which is going to be June's CPI report, we will be down as low as 3.5 on headline inflation, which would be a huge reduction. Again, we have to remember, we're over 9% just 12 months ago to go all the way down to 3.5%. We're going to see significant, right, reduction like that in inflation is only going to have a positive impact on interest rates. Now, the other things that are impacting rates right now, one of the big things that we've talked about a lot is jobs, right? So jobs have been really kind of propping up and keeping interest rates high because that's an enemy of inflation, right? If more jobs are being created, more income is coming, then there's going to be a higher amount of money spent and therefore inflation. Now, one thing that's interesting is ZipRecruiter. We all know ZipRecruiter, one of the largest recruiters. They pulled 25 of the leading employers in the nation. And the report essentially said that their recruiting efforts and their overall job openings and job creations are significantly down. So even though we're getting this BLS jobs report saying, oh, we're exceeding our expectation for jobs by over 150,000 numbers, the people that are actually hiring people, right, or the places, I should say, that are actually hiring people are saying, wait a minute, we're not, right? We're not creating new jobs. So I think, again, as the truth starts to come out on some of these jobs reports, you're going to actually see that the job market is far less robust than previously reported. Now, let's talk about a huge win overall in the mortgage industry. Hit us with it. The great news on loan level price adjustment.
Yeah, so one of the announcements that they made previously was that loan level price adjustment would be if your debt to income ratio was over 40%, then the pricing would change. Well, that would make it a little bit complicated in the escrow and in the mortgage process. So the FHFA just made an announcement that that rule is no longer going to be the case. So huge win in the mortgage market.
Yeah, that's awesome. That got announced in January. It was met with some crazy opposition. I'll give credit to the Mortgage Bankers Association, the MBA, who was really, really aggressive in pushing for that rule to be abolished. So we still have the other loan level price adjustments, but we're not going to have to deal with that debt to income ratio, which, to Jack's point, just gets really, really complicated, right? Like, how are you going to determine someone's income? Somebody's self-employed. It just was going to be a total mess. So I'm glad they did the right thing and pushed for that to get abolished. And I'm glad that finally some common sense took place. It doesn't always happen in our industry, so let's give credit when credit's due. So again, one of the last things we'll talk about was in last week's. We talked about the banking crisis.
Yep.
So one of the other things that's happening right now, right, and impacting financial markets is just what's happening in banking. And I've definitely seen really a reduction in a limitation in the amount of credit being issued or money being lent out. Like I've seen it with a lot of my clients that are calling me about home equity lines, and typically they'll start maybe at their bank where they have an existing relationship, and really well-qualified people are not getting access to that money. I think what's going to happen in turn here is we're going to see an increase in cash out refinances, right? Especially when you have a much higher interest rate on these other items, like auto loans, revolving debt, which is all impacted directly to the Fed funds rate. So I think you're going to see, again, people utilizing all that equity that they've made to utilize that in a positive route, take some equity out, pay off some debt, and get in a more secure long-term fixed interest rate rather than that thing that's tied to prime. And again, on your revolving credit card, you're probably paying 27, 30%, even we're seeing in some people. So that's a little bit out of control. Again, further evidence, it is PacWest. Again, they've been on the watch list for a while here. They've lost 10% of their deposits. Their stock is down over 80%. So they have less money to lend right now. They can't go borrow money because, again, everyone essentially thinks they're not worth anything. I think this is a further indication of a reduction in money being issued, which is going to be a further reduction in inflation, which, again, will help long-term interest rates along in the process.
A lot to look forward to in the next couple months. June 13th and July 12th. Make sure to circle those dates. We'll keep you updated.